Hey, everybody, welcome to another episode of The Everyday Trader. This is Greg Jensen from Options Animal. Glad to be with you, although I'm sporting the Trader Oasis side of me today.
And
And my cohort,
I've got Options Animal going on too. Oh, I
hey,
got a Trader Oasis hat and the Trader Oasis logo behind me though.
Eric, how have you been? Did your favorite team win the Super Bowl?
The Taylor Swift team.
The
Yes.
Taylor Swift team?
I told you about my wife, right?
Yes,
Yeah.
that's awesome.
Kansas City, the Chiefs. Oh, that's the Taylor Swift team. Yep, honey, that's the Taylor Swift team.
Hey,
She was overjoyed when it went into overtime. She does not like watching sports.
I got asked by a friend this morning. So did your favorite did a team you want win the Super Bowl? I said it would have been a better Super Bowl for me if neither one of those two teams was in the Super Bowl, but it was a good game at least. It was entertaining.
Yeah, it was entertaining. It was pretty good. Yeah, I enjoyed it. Yeah.
Well, I know you guys want to hear our opinions about the Super Bowl and why Taylor Swift and Travis Kelce and uh Roger Reed. Now what's the Reed what's his first name? I forget his name.
Oh, the coach
The
with
coach.
Travis Kelce getting in his face.
Yeah, Travis Kelce bumping him on the sideline.
Put
Yeah.
me in, coach. Yeah, that was pretty awesome.
Anyway, you guys really don't care about our opinions on pro sports. What you probably are listening to us for right now is why the market is reacting so violently to the downside right now to this CPI data. There it is right there. Seriously. Andy Reid. There's his name. It just came to me. Andy Reid.
He just about bowled him over too. I was watching that. I watched it. I saw it live, right? He goes running over and boom, right into him. Like, what?
Yeah,
I don't know.
that's not a good look for Taylor Swift's boyfriend right there.
This might be actually I'm thinking like this is really good. It's going to be a meme we're going to see for a while, and we could probably use it right now. I mean, maybe there's a Jerome Powell CPI words.
Maybe Travis Kelce is inflation and Andy Reid is the market.
I think I might be creating a meme here later. This is well. Let me. Well, I guess I'll continue to share the screen, but let me show. Let me show you that meme of the market. So look in real time here in the market. Uh, we're looking at yeah, this is the S&P 500. This is a 5-day intraday chart here, and we are just cruising down for the lows here. This is today, and the CPI report coming out, and Wall Street Journal, everybody reporting that hotter than expected inflation sends stocks tumbling down pretty significantly. We look at the sort of a long-term chart here on stockcharts.com where back down. This is the S&P. Here's the SPX, the S&P 500. So back under that 5,000 level. We just took away 1, 2, 3, 4, 5, 6 days, 5 or 6 days of gains in one day. It's definitely changed the mood a little bit in the markets.
It definitely has, and I think I've said this for a little while, but I'm going to give some kudos to Muhammad El Arian today. He was talking about why the markets. He tweeted a little while ago, but it really is the same thought that I have had for the last several months of why is the market reacting so violently to the downside, and to be honest, not that big of a miss on the actual CPI print. It was stronger than expected, but the market's reacting really violently to the downside. At least the S&P yields, on the other hand, the 2-year and the 10-year yield, rocketing to the upside. And the comment is that he said is basically what I've been saying for a while, is that the market has made this false narrative, this false assumption that the economy is cooling down fast enough that the Fed's going to be able to justify cutting rates soon and sooner than later. And we've talked about it for a while that You know, I think you're out of the risk pretty closely now that you're going to have to eat a shoe in March. You know, but for a while there, we were worried that the market was pricing in huge rate cuts, 7, 8 rate cuts this year, beginning in March. And I think that is now off the table. In fact, I'm still coming back to the point where I wouldn't be surprised if our first rate cut doesn't happen until maybe even the fourth quarter of this year, if it happens even at all this year. So yeah, I don't know. What are your thoughts? I mean, I'm sure we'll dive into some of the CPI data here in a minute, but what are your thoughts on the market's reaction to all
Well,
this?
the probability of a rate hike now has moved out to June is when it's
Rate cut, you mean?
I'm sorry, rate cut. Yeah, rate cut.
Yeah.
Um, has moved out to June, as you can see by the CME FedWatch tool here. You know, this thing has been like a continual wave that's always, 6 months ahead of us, 3 to 6 months ahead of us. It's been that way for 2 years. Why do we think things are going to change? The answer, we got a really strong inflation report today with there was only one company that was even closer. I looked at a tweet this morning from, I don't forget who it was, but they had a summary of all of the different institutions and their forecast. And the highest of all of them was Goldman Sachs, and they were too low. It came in above Goldman Sachs's number. And yeah, so inflation is not coming down. It's not. And the fact is, did you see the early morning headline? I know you follow Ben Hunt. Ben Ben was like, Ben's tweets were pretty great this morning because the initial reports that inflation was coming down, and I'm like, what are we looking at? Are we? I mean, it's if you take like let's take a 3 month moving average and do this or that. I mean, that's like changing the yardstick because you don't like the answer. So let's just go get a new yardstick and measure something different. Sticking with I mean, this is inflation here. We probably might have seen the lows here already. Inflation is ticking back up. This is the core CPI, and this is the headline CPI numbers. This is from Goldman Sachs reaction today. Just looking at these sort of charts, I don't know how you say inflation is going down. Like that's not a conclusion you can make from looking at these data. And we can dive down within and look at different components, looking at the report and see that something like food is coming down. Energy, which is incredibly volatile, is hard to see. We take energy out of here. All items, less food and energy. I guess, some of these components, the trends are heading in the right direction, but it's the headline number overall. And that's, this is the difference between CPI and PCE. The Fed's preferred measure of inflation is the PCE. And they're sort of they approach inflation from two different directions. The CPI reports looks at a standard basket of a certain set of items and just says, what are the price changes for all of those items? And then assigns a number to it. PCE goes the other way. It looks at how things change based on actual consumer spending, meaning that, if you see the price of chicken goes up, maybe you don't buy as much Netflix. So we can see how inflation plays out that way. So one's from the supply side, one's from the demand side. And that's the Fed's preferred gauge, but they definitely look at CPI closely. CPI is so important because other indices like Social Security and other things are tied to it. So it gets a lot more attention than PCE. But I think I saw Goldman's report, and they're revising their PCE forecast higher as of today. So I mean that's just the way things are looking. It's the reality. And to me, Greg, I was thinking about the analogy this morning, and you see this in social media, especially now with election times coming up, that there's this detachment from reality that people. I'm sure we all have people, and maybe I'm one too. I'm sure I'm sure I am in some ways, but I try like hell to be objective. I try to just take the data as it is. But there are people that are saying this is reality, and they keep saying it over and over and over again, hoping that it becomes reality. The Fed is not going to be cutting rates anytime soon. That's just there's no data to support it. But yet, when are the Fed's going to cut rates? How many? The Fed doesn't freaking know. They don't know when they're why would, and I guarantee you, this week Waller's going to be there tomorrow at this event that I'm going to. And I guarantee you he'll get the question a dozen times. How many rate cuts this year? His answer will be, I don't know. I mean, he's going to say it in a polite way. It's going to be data dependent because
No, he won't.
no,
He will,
that's the
he will
after
with the camera there. I want to see what he says at the
the
bar
camera.
later that.
After hours, I'm gonna get him fired up. I am gonna get him swearing mad because I know how I can see it in his eyes. Because somebody will ask him, "How many rate cuts?" And he'll say, "Well, it's gonna be data dependent, yada yada yada," and then he'll go on to something else. And then 2 questions later, "How many rate cuts?" And he'll be very polite.
What we do know about the Fed, and again, comes from you and I's conversations we've had with several members of the Federal Reserve, but Chris Waller being one of them. He's someone who you and I have both befriended. But something that we have learned is that they don't know necessarily how many rate cuts they're going to do or when they're going to rate cuts. What we do know is their comfort levels with employment. And they're okay with the unemployment rate being much higher than it is right now and not being worried about, oh no, we're seeing job losses, we need to start cutting rates. We can see a lot more pain in the employment market before they're going to take their foot off the brake. I think, to me, what you're starting to see in this inflation situation is a similar repeat pattern of the late 70s and early 80s. To be honest, if you've studied it, there was a spike in the early 70s of inflation, and then it came back down for a couple of years. I mean, it was down, it came back down, it hit up at about 7.5%, 8%, came back down to about 5%, only to then skyrocket back up to almost 14% in 1980. And so again, that's like a 5-year period we're talking about, where we had this really damaging impact of inflation that Volcker finally had to really stomp on the brakes in the 80s. Yeah, see, there's the big initial rise with the first recession in the mid 70s. And then it came back down. Everyone thought, okay, we've got inflation conquered, only for it to then meteorically rise again and then actually get back. That's actually showing above 15% in 1980. That would be really damaging to our economy if we saw inflation peak back up again. And I know from listening to Chris Waller and his personal relationship that he has with Jerome Powell, that is what Jerome Powell does not want to see happen again, is a repeat of what happened in the late 70s, early 80s, to the point that I believe they would be willing to push us into recession to avoid that type of repeat of inflation. Now, is that going to happen? I don't know. That's where I'm going to say I don't know yet either, because there's still a lot of money out there. You see that in just the hockey stick to the upside right now of the price chart of Nvidia. That is a lot of money chasing a stock to the upside that is not rational, folks. This is not normal. I've seen it several times in the history of my trading, but that is not a normal chart of what Nvidia has done this year. Because this is not a small company we're talking about. That is hundreds of billions of dollars of market cap that have been added since just the first of the year.
Well, Nvidia's number 4 now, or they were yesterday. They were the 4th largest market cap.
So they surpassed Meta,
They
surpassed Berkshire.
Google, I think.
Or yeah, sorry, Google. They surpassed them a while ago.
Still
Meta.
almost $2 trillion here in Nvidia.
Yeah, so the only companies bigger are
maybe
Apple,
it was Amazon. No, it
Apple,
was Amazon.
Microsoft, and Amazon.
Yeah, they passed Amazon because Amazon's
That's who it was.
175. Yeah, Amazon's 175.
And so Google is still a little bit bigger. Or are they number 3?
1.8.
Google's just barely bigger right now.
Yeah. Apple 2. They're almost 3.
Yeah, and Microsoft's right at 3. At least they were a few days ago. Are they still hanging on to the 3 trillion with today's
3
pullback?
trillion. There you go.
Just barely.
Yeah, so all of these companies getting a correction. I'm going to tell you honestly, I think this is a an opportunity. I think for anybody that we're looking at the market. Maybe there's some individual names in here, but I think overall, looking at the market, the S&P 500, I think this is an opportunity. I don't think we've seen the last high in the S&P 500 this year, so it might take us another couple weeks or a month or so to get back there. So I'm not saying buy today, but I
Or
don't.
maybe just a couple of weeks.
You saw Hardika Singh's piece this weekend. The journal, she had like 5 different or 7 different ways of valuing the market. And if you go through all of them, the market is not overvalued. And there's only one that we said we were, and it was Shiller's CAPE ratio. Shiller's, yeah, that CAPE ratio shows that we are overvalued. But looking at historical PEs and other fundamental forward earnings, back earnings, and looking at some of these other metrics, I mean, we're not we're not cheap. It's not a buy the market, but the S&P 500 isn't like past bubbles where we're overbought. I just popped up this that tool. Now I've lost it because I got so many open windows here. Uh, this is interesting. I was looking at, so here we have this is kind of a busy chart, right? So the blue line is the unemployment, right? The red line is CPI inflation, and the green line is the Fed funds rate. And if we look at past recessions, it looks like the Fed funds rate ran up before the inflation went up. So the Fed funds rate went up, then inflation went up. So is that what makes inflation go up? Is the Fed? It's not supposed to be, right? That's
Right.
supposed to make it go down. And here it went up pretty coincident. If you look at what's happening now, we saw inflation go up and the Fed funds rate kind of lagging behind it. I suppose you can make the argument that the green line being the Fed funds rate probably could go higher. I don't know. And we're watching that red line come down. This is where we started talking about. This is a very long-term chart going back to the 40s here. But trying to get that inflation down again is what we're trying to do. And the Fed funds rate tool in the balance sheet are how we're accomplishing that. So I don't know.
I think,
When I look at this market and I say, if you knew in November, because we were sure in November that there were people thinking we're going to have rate cuts in December, in November. There were people
yeah.
thinking we're going to have rate cuts. If you had a crystal ball and knew that we were going to be here, we are in the middle of February, and there's no rate cuts in sight. I mean, we're at least May or June at least. If you knew that ahead of time, you would not have predicted the market would do this. You would have predicted the market would have been down.
Which I did know, to be honest. I mean, you and I both knew.
I,
Now that
you
doesn't
know,
mean you still would trade a
we
bullish.
said it. We said it.
We said it.
There's a difference. I mean, I don't know the future. Right? There's no future facts, right? Jeff says that all the time. No future facts. But we were saying the rate cuts, it's not going to happen. I was so confident in December. I said I would eat a shoe if we cut rates by March. And everybody's like, well, get ready to eat a shoe. Didn't happen. By the way, I watched Naked Afraid, and they were eating this leather from this water buffalo, and they were saying that some people actually will eat their shoes, that
Yeah.
you can cut up your shoe and boil it. So I was looking for shoe recipes.
Shoot. Yeah, there you go.
Actually, I was planning on, let's put it, this episode brought to you by Teton Sourdough Company. I was going to get some Teton sourdough loafers.
We if you do have to eat the shoe, again, no future facts. We do still have the meeting that's coming up in a month. Maybe they will surprise us and cut rates, and then we'll have you eat a shoe on film. But I agree with you; it's not going to happen.
Well, I think it's there's opportunities, always opportunity out there. I think this in a market like this strategy that I like to use this Costanza trade a day like today, you just probably close the trade because you booked a ton of profits on it. I was looking at several ideas this morning, which all should have done because I've been busy all day. I should have done because I would be closing them all for a nice little profits right now.
Hey, I'm going to give some kudos to Jim Bianco, and if you see him this weekend, give him my best and apologize for me not being there. But I remember last summer we were with him in Jackson Hole, and you remember we were eating ice cream at the
Oh
little ice
yeah,
cream
yeah, yeah, yeah.
shop
Yeah, that
there
was a
in
good
Jackson
time, right?
Hole.
Eric Parnell was there with us.
Yep, Eric Parnell was there with us, and
Yeah,
he
yeah.
said,
The whole gang was there, right?
yeah, he said, I'm going to make a prediction that we just saw the bottom CPI print. That was the bottom. CPI has gone up every single month since July. And I'm going to give him some kudos that he was calling it then. And everybody, even for the last 6 months, has been talking about
Uh,
inflation's coming down, inflation's coming down. And that was, I'm looking at a chart right now that Jack Farley tweeted earlier today about the 3-month annualized core CPI, and July was the bottom print. So I think I'm going to agree with you, Eric. I'm not of the opinion that this market has to have a massive correction right now either. And the reason why I don't think it has to have a massive correction is the economy's still strong. We are making money. Companies are beating earnings. That doesn't mean that we can go up indefinitely. I do think the market has to price in this idea that the Fed is going to be higher for longer to control inflation. So are we going to see another high this year? Have we put in the highs for the year? Probably not. I think I agree with you, but I also think you have to be cautious thinking that Nvidia can go up 5% a week for the rest of its life. Because
I'm
it's
out of Nvidia, so I'm feeling like a little bit of FOMO there. But yeah, it's kind of scary. I look at it and say, "Do you want to jump back in?" And it's like, I don't know. It's pretty
had an
red hot.
amazing move. I
It's
mean, it could have a 20%, 25% correction right here and still be up 20% on the year to date, and it's only February.
Zero Hedge did a posted a newsletter, the Marketeer newsletter yesterday, and what they did was they took they said here's a good sort of approach is take the technical chart and invert it, and if you were going to short a stock, would you short it? And if you took Nvidia and flipped it upside down, you'd be like, no freaking way am I going to short this year. Like this is it's ready for a bounce, which is the exact opposite, right? So this, if you took a look at that chart and give me a second. I'll pull that up. I was gonna.
They have earnings in a week. That might be an interesting trade.
This is Ben Hunt from the Ben and yep, Ben and Jim are friends.
There you go.
This is Ben, not Jim, but Ben Hunt. January 11th. He posted this today. Hey, good. But back in January, he said it bottomed in June, and he probably picked it up from Bianco.
He probably did, yeah.
But Ben's classic because today he's like prices for the WAPO, Washington Post prices have cooled, and look at this one. Inflation is cooled in January. This is the headline. This is the Wall Street Journal headline this morning. Inflation cooled. What? I don't know what you're looking at. I guess, oh, look at the overall, maybe went down a little bit. The core inflation cooled. Just nuts.
Yeah. FOMO. Is it time to get back in? So again, Nvidia has earnings next week, 21st.
Well, if you own it, what's a great strategy? And go back and see Greg's favorite trade.
A collar trade, exactly right. I'm actually just looking at could I do a Costanza through or a version of the Costanza? Maybe an exploding bear call.
There you go. Do you own, you don't own shares, but if you did own shares, a collar trade would be nice.
Yeah,
So
I'm not
here's
in
the graph
shares.
I'm talking about. And pull up this newsletter here. So here's the chart of Nvidia, right? So this is crazy. And by the way, this was yesterday. They said it's doing a shooting star, which is a massive warning sign. That was yesterday, which quite prolific or prophetic, I guess, is that call. But if here's they say that when things go fully parabolic, we like to invert those charts and ask ourselves whether or not we would short more of this. If you're looking at something like this, would you short it? This is the upside down Nvidia. This is the upside down. Would you short this thing here?
That's just insane right there is what that is. So No, I would not short that right there.
Yeah. That's like, would you buy this year? Like, no. But we did get a rash of upgrades today. UBS upgraded it to 850. And there are 5 upgrades this morning. I don't know if you saw those in the newsletter.
Well, yeah, I did. I did see that. And from a fundamental standpoint, they they are doing things really well. I mean, the company's making money. They're the, as we mentioned a couple weeks ago, I think they're the only real player in the semiconductor space who has a dominant position in AI. And so I don't want to say that Nvidia is not the real deal as far as making money. It's just the market's reaction to that positive news with Nvidia is, I think, ahead of itself and needs to come back. And I'm going to say the same thing about the S&P. I think the S&P's earnings are doing really well. And I think there's a chance at the end of the year that the economy doesn't go into recession. But it's just ahead of itself right now. And it's got to price in this idea that the Fed may be higher for longer.
Yeah, I'll be happy when the market finally realizes that is what's going to be going on. We're not going to be cutting rates anytime soon, because it's just for the reasons that you shared. Very academic history there. What would happen if we get out of control? And we do not want that to happen. Nobody wants the Volcker thing to happen again. But were you there when Waller talked about talking to Volcker?
Yeah.
And that was a funny story. Relay that story.
I don't know if I remember off the top of my head.
But
what do you
he said to Volcker, he says, wow, you had a lot of guts, holding your guns and raising rates and letting, forcing us into, recession, or by raising inflation and letting it go up to what it hit 17%.
Yeah.
And Volcker said, if I'd have known it was going to do that, I wouldn't have done it.
Yeah.
But once you're in it, you can't stop. So if he'd have known ahead of time, but he did the right thing. But
well, and that's, like I said, in that same conversation is when he shared with us that Fed Chair Powell's bound and determined to not repeat that mistake that Volcker made in the late 70s, early 80s that caused inflation, because it did do a lot of damage to a lot of individual investors and households, and slowed the economy drastically in the 80s. And I let's hope that he sticks by his guns. There's a lot. It's a little bit different world. I shouldn't even say a little bit different world. The speed at which information moves, the speed at which it makes markets move, because of those. That's what's very different now versus back in the 70s. Back in the 70s, how did people get information in Los Angeles about a meeting that was happening in Washington, D.C.? Well, some people were on the phone, but most of the times it was they read the Wall Street Journal that got delivered to them the next day and then made their own decision. And so markets were really slow to react. Interest rates were slow to react. I mean, we are such a globally interconnected economy at this point that we react at the speed of light. And that's why I think we also get ahead of ourselves like we have, because this narrative that whoever started pitching it, that the economy needs, that the Fed's going to start cutting rates, has just been adopted by the market, and it got priced in. It's priced in right now, and that's why we're reacting back to the downside today, because they're maybe pulling some of that back out. The question is, how much further do we need to go? Maybe we've already all priced it in. It looks like the S&P's up about 35 points since we started recording this. So we're rallying. We were down almost 100.
Buy the dip, man. Buy the dip.
Buy the dip. Has Nvidia gone positive? Yeah. Oh, we closed. We just closed.
Yeah,
So
just closed. We just closed. The market just closed.
Just missed going positive. Good stuff.
Well, this is more market commentary, and it didn't have any trade ideas, but I think there's plenty of opportunities there. I always think that the most important thing really is to understand your exit plans. This is really the secret to trading. It's not about finding some better source of information. Everybody spends their time looking in the wrong place. looking for some better technical signal. I mean, most technical signals are based on two things: stock price and time. It's just you're dividing or subtracting or doing square roots or moving averages. It's all math on the same thing. So I mean, there's no new data that's out there in technicals. I mean, it does add some value. It does make sense. So you can confirm trends and you can identify trend changes. I am not throwing technicals out the window, but sentiment, getting an idea on mood in the market, that's really the most undervalued, in my opinion, area of the market. People don't know how to get objective about sentiment. And there are objective measures. Looking at volatility indices and short interest are just a couple of good ideas. And then the third thing, of course, is fundamentals and keeping an eye on fundamentals. That people like Warren Buffett step in when things are a bargain and buy them when he thinks they're underpriced, and other people will sell them when they're near tops. I would guarantee Buffett is not buying Nvidia right now.
No.
But looking at all of that is important. But to me, the most important thing, we teach a 6-step process at OptionsANIMal. And the fourth step is defining your exits. And that is, when do I take profits? And what do I do if that doesn't happen? And you can't be explicitly clear on what you're going to do, but you can be pretty damn close. And you can be, I mean, it's possibly to the penny. So, okay, when the stock crosses below, 99, I'm going to do this. You can get that explicit with some strategies. And that's where you take your emotional side. This is the whole thing, is getting your emotions under control and, accepting reasonable profits. And like, somebody does a covered call. I had this question this week. Somebody did a call on ARM, a covered call on ARM. You saw what happened with ARM this week, right?
Yeah. Big earnings, shot to the upside.
25% move. And this guy says, I did it. He said, how do I fix my trade now? So when you place the trade, you're going to make 15% return profit in a month. Like, in a month, you're going to make 15%. I'm not guaranteed, but that was the trade. Now you're still going to make 15. Now, if you didn't have the stock and have that short call in place, you'd be making 25. But what do you want to do now? I mean, it's a sunk cost now. You can't adjust. You can't catch that gap that happened in the past. And what could happen is you could adjust that, and ARM came back down. So had he adjusted, he would be facing a bigger loss than he did nothing. So being comfortable, am I good with 15%? That's a damn good return in a month. Take it. You hit 15%, call it a win. Don't be second guessing yourself and thinking, oh, FOMO, I could have done better. That's
the mistake that so many investors make in the market, is they look at their trade, they look at their profit levels. And this goes back to your point that you made of exit points are really important to help you be successful long-term. And ultimately, the whole purpose of exit points is to control those emotions that cause you to make mistakes. Because FOMO is a damaging emotion. Leave it alone. I agree. 15% in a year is arguably a good return.
In a year,
in a year is a good
and the
return.
risk, the probability of you making it is greater than, you got like 70% chance of making that money. Like, it's crazy to me. I don't know what. There's just so much that goes out there. So many different people with different goals and objectives. It's just good to be part of this community that we're in, and be able to talk to not just you and me and other instructors, but our fellow students and members are able to, see that there are rational, reasonable people out there, and lots of people. We got thousands of people that are part of our active community that trade this way.
Well,
what if we could spend more time together?
We're working on that. I know we're about going to wrap up, and we'll let you guys know details next time, but hopefully we're going to have a live event here in the Super Bowl city.
Can I give him a preview of how lit these events are?
Yeah, sure.
This is what happens at Summit. Do you remember I did that?
There you go. You've lost a lot of weight since that video.
Yeah, I have. I was actually down there. I thought it was looking pretty good there. I'm looking at myself now. Whoa. Yeah. So, yeah, I have a flamethrower. Of course, my wife's like, "You bought a flamethrower?" Of course, I bought a flamethrower. Why wouldn't I buy a flamethrower?
I'm just glad the event manager for the hotel didn't walk in right then.
Well, there was somebody from the Marriott in the back of the room. That was me. I was turning it off, and somebody's like, "I didn't have my camera out. Do it again. Let me take a picture." So, yeah. So, yeah, I don't know that I'll be bringing that to Vegas, but that's the kind of fun that we have.
So yes, we'll give you more details as we get closer to our event that we're planning on the middle of April in Las Vegas. So
And we might have a special offer for our viewers here.
yes, we
Working on
definitely
a special deal that'll make it
well, my friend,
an offer you can't refuse or a deal you can't. Oh, you got to go because you got to do the.
I do. I'm going to get ready for the daily market update for Options Animal, but have fun in the Bahamas. Give everyone my best. Let's do it. Let's do a recording next week when you get back.
Yeah.
We'll get a download of everything you learned.
Awesome.
Okay.
Sounds good. Thanks,
Thanks, everybody. See you at the next one.